Morning, Steve Free in Chicago with the morning grain comments. Well, the good news is for prices, I guess, is that we're up a little bit. Beans about 6 cents, corn 3, and wheat 1. On Friday, there was talk that the president asked China to eliminate the tariffs on U.S. farm imported goods, and that would be a positive thing, especially on the beans. There's also articles in the Wall Street Journal and Bloomberg suggesting that the Chinese may agree to do that, and that we're a step closer to getting a deal. Might be just a few fine points in setting a date for the president of China to come to the United States and sign the new deal. The U.S. Trade Representative, though, says there's still a lot of work to be done to get to that point, so it's kind of the good cop, bad cop type thing that we continue to see. I think in the good old days when we had pits, I think we would be trading markets higher. I think this is one of the most important events that could happen to U.S. agriculture, with the talk of China coming in and buying another 360 million bushels of beans, maybe 240 million bushels of corn, and 180 million bushels of wheat. So on Friday we have a USDA supply and demand report. Most people think for 18 and 19, the U.S. carryout of 910 for beans is okay. 1735 for corn's okay, and wheat 1010 might be just a little low. But take 360 million bushels of beans off the bean carryout, 240 in corn, and 180 in wheat, and all of a sudden you have a different dynamic as far as prices are concerned. Again, machines are the biggest traders in our markets, and so they may want to see an actual deal and actually see the fine print of how much they're going to buy, when they're going to buy it, and if this adds any global demand or just shifts demand from other origins back to the United States. And how long is the deal going to be enacted? Most people think it's like 5 years. So I think it is a big thing for agriculture, but so far the machines are not trading as much as if we'd had a pit, and pit traders were in charge of trying to find value. For next year, 19 and 20, again, USD is using 845 on beans, 1650 carry out for corn, and 944 for wheat from the Outlook conference. Won't happen until May, until we actually get actual numbers. The other thing we're going to be watching for is weather. Down in South America, some of the dry areas in South America got rain, and some of the wet areas are dry. And so basically it's favorable for crops down there. But we just don't know, number one, how much beans out of the United States is going to cut into Brazil, and whether they'll export to other countries and not really increase global demand. And number two, Argentina, and whether or not their crops will be big enough to reduce the meal demand here in the United States and reduce our crush. We also will be noting in the United States that it's cold today, and that is going to continue to mess up logistics here in the United States and delay spring planting. It's also wet across the southern part of the United States, delaying early field work there. For the month of March, it looks like we're going to be wetter than normal. Temperatures might get closer to normal, but that wet conditions is going to continue to cause flooding and delay plantings, and see if that has any impact on new crop prices. So again, it's difficult to move prices lower from the Feb lows, but it's also difficult to move prices higher in March until we get closer to the planting season and whether or not we have a deal or not. So in past years, I think the deal or a potential deal would be more bullish than we have on prices. Right now, 918, 920 is resistance in the May beans, 376, 380 resistance in May corn, 465, 470 resistance in May wheat. So we can see if we go back and test those levels, and if we can push through them on a chance for U.S. and China trade deal. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.